Hello, everybody. I am Ben.
Welcome to this episode of The Circuit. This episode is being recorded August 15th, 2025. As a reminder, all participants are in listen-only mode. A replay, transcript, and show notes will be available at the conclusion of the program. Joining us today are your hosts, Ben Bajarin and Jay Goldberg.
Hello, everybody. I am Ben Bajarin.
Greetings, programs. I'm Jay Goldberg.
I hope everybody enjoyed the new little intro we created. And if you listen to any number of quarterly earnings calls, you probably smiled or laughed or had PTSD at that opening. But we thought it would be fun. Go ahead.
It absolutely triggered me when I heard it first time because I've listened to, I counted once, like over 1,000 earnings calls in my life. I'm at the point now where I can probably read a safe harbor statement just from memory.
From memory.
And hearing that voice, I was like, oh, I was very triggered.
I always like joke with people. I'm like, whenever you hear this, like not every earnings call does it, like, but some people they'll do the like, this is from Deutsche Bank Capital. I always call it my earnings call voice when I make fun of people. So anyway, that was the humor. I don't know. I thought it would be fun. We'll keep doing it until somebody tells me they hate it, or we'll change it. Maybe it'll be Santa. Maybe it'll be Jekyll and Hyde. I don't know. The world's our oyster with AI voice cloning. All right, enough of that. Let's move on to, man, so much happened this week.
So much
happened. Blanking on the day or when stuff happened, but let's start with the we talked about this a little bit, but then some additional kind of news angles came up I want to talk about. The licenses to, or China, or however you want to structure that, for AMD and Nvidia, that is kind of being talked about like a revenue share, but really it's a tax which everybody I've talked to kind of like uniformly agrees this is unconstitutional, but probably neither AMD nor Nvidia will file a claim. So it's kind of weird because you're sort of like, well, we hate it. We didn't want you to sell this stuff to China, but oh, you're going to pay us. So now it's okay. And obviously, they want that money. They want to compete in China. They don't want to be left out in China. So we're going to do what we can, but I'm fairly certain that that's unconstitutional. But, I guess that's the world we're in.
Somebody I was getting interviewed on TV. Somebody asked me about it, and I said, "Look, I'm just a humble semiconductor analyst. I don't understand complex regulatory matters or Article 5 of the Constitution. It seems like a bad idea to me. It seems like a bad idea to me on a number of fronts.
I think and I talked to a number of friends in legality, like none of them essentially like legal constitutional law, but essentially like know enough about like, well, what could this look like relative to the export tax amendment. And again, right, it's being worded in a way that's like, they're, just giving us, but it's really, you're penalizing a company, you're forcing them to share money with you in order to sell to a third party, which is really should not be legal. I think the concern is, does this set a precedent, right, for other companies where, an administration can say, oh, we don't want you selling to China unless you share that money with us, right? Because And that's, I don't know. That's the bigger concern. Again, someone has to complain, and I don't think anyone will. So it's like,
yeah, I mean, Secretary Besant, I think, actually said like, "Oh, this is a beta test. If this works, we'll try this other places too." And the thing that really gets me is, and I've been saying this to everybody who will ask is, I lived in China in the 1990s when China was moving away from a centrally planned economy and reducing its stake in state-owned enterprises. And it's something different for America to be moving in the opposite direction towards a planned economy. And okay, okay, doesn't seem a good idea to me.
Yeah, I mean, again, I think to be honest with you, I was surprised more people didn't bring up the legality of this. I mean, I saw Ben Thompson write it, and his exact words were, "It's almost entirely certain that it's unconstitutional." But he said the same thing, right? Somebody's got to complain. I know a bunch of the reporters I've talked to trying to do due diligence the same way, talking to experts similarly. Everybody's like, somebody has to file a claim, like they're probably not going to. They don't want to make a stink, and this is just the cost of doing business now. Is you gotta play by whatever rules the administration throws at you. Um,
Yeah.
so
Again, I don't, I'm certainly in no position to talk about the legality of it. I'm sure there's smart lawyers who can figure that out. Um, but I just think, in terms of just basic principles, we we're worried that we import more than we export, and making exports more expensive seems counterproductive to changing that. And also, I think I'm very confused, as I'm sure the Chinese side is. Like, up until very recently, the government was saying we can't export Nvidia chips because it's a national security threat. But if you pay enough, it's okay. Like, does that mean national security is for sale? Like, that seems to be the message China is taking. I mean, they assumed as much anyway, but
yeah, agreed. And then you kind of had the flip side of that, where it looked like the Chinese government was saying, or highly discouraging people from using the Nvidia and AMD GPUs. I mean, again, trying to be in favor of local companies. What Huawei's doing with their accelerator, which again may or may not make them competitive. Um, but it's just an interesting dynamic, that we're in. They're going to really struggle to compete in compute infrastructure. Also, for example, I mean, I know we all feel like AI has a lot of strategic assets, but um, should Microsoft not be able to sell Windows there? Should Intel and AMD not be able to sell CPUs there? Like, if you
and
really wanted to cripple them, you could. Like, what are we actually concerned about here? Is kind of my broader question.
yeah, I mean, why stop there? We can Raytheon sell F-35s, or Lockheed, or whoever makes them, sell F-35 to China.
Oh, great. I don't want to go down that rabbit hole. But you're exactly right. Exactly right. Ugh, it's weird. But I don't know. I guess the question is like, is is this the end of it? Like, nobody's going to complain. That is what it is. They're going to pay a fee to the government, share revenue on what they make in China. Um, like, is that end of the story, or is there going to be more drama? You know.
I think that question answers itself. Like I was talking to a reporter just an hour ago about the tariffs, and she asked me, like, oh, there's a plan now to put 300%, four hundred
Yeah, two
percent
or 300%. Yeah, that's some
on semiconductors, and she said,
right.
how will that work? And I was like, you're asking me for the DNA printout for a unicorn. Like, I don't know.
How
Give me
does
all the
any of this
details
work?
of something that's fictional. I kidding aside, I think what's happening in a lot of these areas is that there's a negotiation taking place
Yeah.
on a lot of these things. There's negotiation taking place. A lot of it's behind the scenes. There's a public facing side of it too. And so, like, in the case of the tariffs, like, it's unclear to me who exactly is the target of that message. But it's a message. I don't think we're really going to have 300% tariffs on semiconductors. Maybe, who knows? But I think the message is possibly to Intel saying, and we'll get to Intel in a second, but, like, I think the message is, come with us, come with the U.S. government. We'll bring treats. We'll bring tariffs on your competitors. Or maybe the message is to Taiwan and Japan saying, you need to come up with a trade deal. So I don't know. There's some tactical logic to it. Strategically, I think it's poorly planned out, but tactically, I think that's what's going on.
Yeah. Well, we're going to talk tariffs a little bit toward the end in our somewhat christened segment. but but I yeah, I think it's really hard, and you see this again, right? We're going to talk about applied materials in a little bit, and you see everybody's kind of like, we don't know what's going to happen with our ability to sell products to China. So like, we'd love to guide you more accurately. The problem is we can't because we have a ton of variables. Um, and you just don't know, right? I mean, that's the thing. Like, is all of your product tariffed? Am I safe from everything? Because even though Apple, dog and pony showed and, did the whole thing at the White House, like they're still going to hit with some tariffs. Like they're not tariff free. They're just going to have them reduced because of all the investments they're making, in America. So you're kind of like, all right, well, what's tariffed? I don't know. So yeah, everybody in the supply chain we keep talking to has no clarity on this. Um, I don't know. It's really hard to plan. It's really hard to formulate when we don't know. So that's, but again, to this one thing, I've just the resolution for this to sell in China, I think is very sketchy. And so I do kind of hope that saner minds prevail. Like, should we just go along with this, or should this be something I keep push back on? Because I'm like, the whole time I'm like, this doesn't, I mean, none of this feels good, to be honest with you, but it's just all right. Well, anyway, if anybody has thoughts on the unconstitutional nature of this or whatnot, hit us up. But I find it fascinating, to be honest with you, that we're just willing to go along with some of this stuff in the meantime. So
Fascinating is one word for it. I would. You know what? Let's move on.
all right. Neo Clouds, CoreWeave and Nebius. Recent earnings. I know CoreWeave was, I believe, last week, but some interesting things to talk about. Actually, maybe it was earlier this week. I feel like, correct me if I'm wrong, that essentially the kind of thesis or issue, right, with CoreWeave is that profitability concerns kind of overshadow the earnings. Like, yes, you're making money. Great. You have leveraged yourself, however, to spend on this CapEx. We all believe, right? You're going to make money on this infrastructure, but you're heavily leveraged. And can you be profitable in the model that you have? Seemed to be the debate I saw around, why they took the earnings hit despite a beat in a raise.
Yeah. So we're recording this Friday, August 15th. CoreWeave reported earlier this week. Nebius actually reported last week. We didn't touch on it. And they're both neo clouds, right? They're tier 2 cloud service providers who compete in theory, with AWS, Azure, providing cloud computing services, but they're solely focused on GPU compute with Nvidia. And there's a lot of skepticism around that model.
Yeah.
Street, in my head. But it was interesting. This is CoreWeave's second earnings since going public.
Yes.
Their first one was much better received. They put in good numbers. Stock was up. This time around, the quarter was great. The revenue guide for next quarter was good, but then they said profitability was a little bit less. They raised revenue guidance for the full year, but they held their profitability guidance, and that caused the stock to fall 20%. Right? I think it's down 25% on the week. I mean, that's a big hit it's a pretty big cap. And I think it's a lot about just investors are there's I think there's just a baseline of questions about the viability of the neocloud model, right? And it's a right and it's a very there's a lot of skepticism in the market about it. But at the same time they they're they said their biggest constraint is electricity, right? They would build more if they could. So I think it's worth keeping in mind. Like there's a lot of demand for what they're selling, and I mean they're spending $20 to $23 billion in capex this year. I mean, that's a big number. That's like very that's the tier 1 hyperscalers are in the $60-70 billion range, but 20 billion is in normal times that would be a huge number. That's half a TSMC. right? So they see demand. I think it's
Ooh.
and then different though was Nebius, who is smaller, lower profile, and they had good numbers. They said a lot of the same things, but I think there's a little bit more comfort there around what they're saying. They're much smaller, and maybe that helps them. I don't know.
Yeah, I do think that helps them. They're kind of a newer name people are watching in neo clouds, and they're also able to pick off a little verticals at
And
this
they
point.
have other businesses beyond the NeoCloud stuff.
Right, exactly. Yeah, so it's actually not that dissimilar to DigitalOcean as they started to pick up more kind of neo cloudish stuff, but they were actually doing really well for a lot of small startups who just needed some infrastructure, rent GPUs, and they had some software for app modeling, app simulation that worked. So you actually had some developers, like that was kind of their niche, right? Developers need capacity, don't want to necessarily pay for AWS. The point is there's already seeing fragmentation in which markets you go after. Um, but I mean, I do think the moment we're in that, I think everybody kind of recognizes is, we have a capacity shortage. We're limited by the number of GPUs as well as the number of electricity. In fact, even in interviews that Sam Altman, CEO of OpenAI, has been doing with media lately, he actually brought it up that he was like, we couldn't train the model we actually wanted to train because not only do we not have the GPUs, we couldn't secure the electricity to do so. And so it was sort of like we could do a lot more with our software if some of these bottlenecks were solved, but because we couldn't, this is kind of where we're at. And actually, like from a Morgan Stanley note that actually I really liked, that was they were trying to figure out the economics of a AI factory and used CoreWeave as an example, as well as some standard milliwatts conversion to profitability and token from Schneider Electric. That they basically said if you assume infrastructure depreciation every 10 years, every 100 milliwatt capacity would require 660 million in capex for power generator, electricity distribution, and data center building. The potential annual profits of a 100 milliwatt AI factory at a price of 2 cents per million tokens um, is basically where they actually saw the profitability model, that you would make money right on your infrastructure if if you built this out, right? These are revenue generating, machines at that tokens per in per what you can charge. But I found that fascinating, right? To have 100 milliwatt, which is sort of the average of these data centers, that's 660 million of capex. So if you just look out and go, well, how many super clusters of Rubens, am I going to need next year, right? And that's going to be, I don't know, 500 megawatts. All right, well, that's a couple $1 billion in capex just there, right? So it's just fascinating to me that again, right? The infrastructure is the limitation. People believe you'll make money, and then the question, which I think you and I actually talked about a lot, which was like, are the neo clouds the canary in the coal mine for when we have enough compute? And we know we're not anywhere near that, but I still think that's an interesting question. But what if this is so computationally intense that it just requires like forever an obscene amount of capacity? And I don't know. I feel like there's some thesis there.
I you're making me nervous. I get nervous around words like forever. Um, I think there is clear demand right now. I'm not fully bought into the idea of AI factories as a viable category, right? I mean, you just mentioned that DigitalOcean is getting into this, right? There are 30 neoclouds.
There's a
Does the
lot.
world,
Yeah.
does the world need 30 neoclouds? I mean, we already had 5 public cloud service providers. Do we need another 30 just doing GPU? Um, it's a little treacherous out there. That's what gives me pause.
Yeah. I mean, that's the thing. Like, is this? God, I hate these analogies. You're gonna cringe at this, but like, is this oil or is it railroads? Like if I just had land that constantly produced oil, am I going to make money? Meaning that if I have land, secure electricity, and build data centers, am I going to make money? Or are they going to become obsolete because some other infrastructure happens, or that it optimizes so much that you can run it just on the big hyperscalers, right? You don't need the neo clouds. But that is like, that's not in the next couple years. I feel very strongly about that. Whether that's the 5 or 10-year horizon, I don't know. But this is the thesis. This is why I see exactly what you described, which is like there's a bit of uncomfortableness around the neo clouds because like we're not sure. Like you feel bubble-ish and you're like, okay, well, I feel like I see this growing the way that this is growing, but at the same time, is it sustainable, right? We know we know the hyperscales will make money and maybe a handful of neo clouds will make money, but how much infrastructure is needed? I don't think we have a good answer to that question.
Yeah, right. And this is why I keep coming back to the subject of what are we going to do with all of this AI, right? If
Tokens. We're gonna run tokens.
like, but what are we going to do with the tokens?
Sell them. Eat them.
I got to tell you, every time people talk about tokens in the context of AI, I'm reminded of crypto because I
Oh
was
no.
you're right, because I worked with a crypto company for a long time, and that world talked a lot about tokens, and it was the exact same conversation. We're gonna make all these tokens. Oh, okay, what are you gonna do with them? Sell them, launder money with them.
Yeah, I mean, again, right? I think you distill this down to, do you monetize these tokens, meaning, right, I make a margin on whatever my interest costs are, or is it, OpEx because I'm just serving it to my employees? And again, I mean, we're talking like I did the numbers, up to date on where we're at for, Google and Microsoft with OpenAI and Claude and whatnot. And you're sitting at like 5 to 6 quadrillion tokens for this year, for 2025.
Right.
Probably doubles next year, right? Maybe a little bit more, maybe to 10, maybe a little bit more. But the reality is like more computes, cranking tokens, are the back end of generating AI. And like we're not even into video creation for everybody, right? We're not into agents where your software runs at a prompt and you can connect. So like we still have this weirdly long way to go, and I just keep seeing, the narrative from everybody is, man, we're out of GPUs. We ain't got no more compute. We got no electricity. Okay, right. That's why I think this is interesting that this build out happens. But again, to the neoclouds, I think what makes everybody uncomfortable is how they're financing these things. And I think that's a fair point, because even with Nebius, it was like, well, we've got assets that we can liquidate if we need to, right? This isn't coming from so much the public market, nor is it coming from an influx of profit. They're leveraging debt, and it's kind of like, okay, sure, but how safe is that, right? And that's been an interesting question.
Yeah, it's very interesting to me because I've been a financial analyst for a long time, always in tech, almost always in tech, and like debt has always been like none of us spend any time looking at debt, right? The average tech analyst, the average semiconductor analyst, like I guarantee you, you look at their model, their debt model, it's like one line where they're just like, oh, it's going to go down by 2%, right? As opposed to industrials analysts or bank analysts, who that's all they do is they look at the debt structure of a bank, right? And so now we suddenly in this world we're like all of us tech analysts are trying to figure out debt structures and bond repayment schedules. It's like, oh, this is very alien. And I think that was a big topic on CoreWeave's call. They make this a big point, is like how innovative they are in financing, which again is very weird language for us in the tech community, because innovation means coming up with a new product. Innovation means coming up with, you know, dancing robots. Innovation doesn't mean financial engineering. And I'm not throwing shade on CoreWeave. It's just like they're talking about something that's different than what we in the analyst community are used to looking at, right? Because
Yeah,
they're right. CoreWeave is basically said they raised a bunch of money using their GPUs as collateral,
right, right,
which is why this question about how long the
right.
life of those assets is very, very important. Suddenly, is it 5 years? Is it 3 years? Is it 7 years? Like there's a lot of that debate going on right now.
Yeah. No, but that's why I think it's fair, right? Despite they're making money, they're probably also going to have a good quarter next quarter. Like they're monetizing this, but right, can that profitability offset their back end structural costs? And like I said, I think it's a fair question for all the neoclouds, to be honest with you, even though most of them are public. Like, we'll see how much how much profit they can make to offset that, so that they can essentially guarantee their long-term ability to invest in capex, because they're not Microsoft, Amazon, Google, Oracle, Meta. They don't have that kind of cash. So, and I have to imagine there's a fair amount of private equity in some of this stuff, but
Oh, you have no idea.
oh, great. I mean, I'm assuming, I just didn't. So yeah, that adds the wonderful dynamic of private equity. If you're in private equity, we love you. We love you. All right. Applied Materials also dropped. This was also fascinating. A good quarter, kind of related to China as a bit of a surprise, but shady guides, kind of like we talked about, with a lot of variables to China, and the stock didn't do well. And I'll let you give the brief, like, just your brief take, and then I have a point that I want to make on Applied, because I don't know how many people in our ecosystem cover them. It's kind of like equipment makers is not always the most sexy and wonderful thing to cover, but anyway, I have a broader point.
Yeah, I mean they reported a good quarter, and their guidance was very fuzzy, and they said China was the big reason for that. And so Applied Materials, AMAT, is it's a really capable company. Like it is like, I know in wafer fab equipment, everyone's looks at ASML as the darling, because it's their lithography systems are so critical. But AMAT is a close second. Like they also make some very, very, very sophisticated, complicated, pushing the boundaries of physics kind of products for other parts of the fab supply chain, or manufacturing chain. And I think there, people had gotten a little bit weary of ASML in recent years. They've kind of slowing down after having a tremendous run. And there was some thought that, okay, the next big wave is going to be Applied Materials, and other KLA, Tennecore, and Lam, and some of those other companies are going to have a good run now.
Right.
And I think there's still very strong spending in foundry capex, fab capex.
Yep.
But one, a lot of that is coming from China, and
Yep.
that's very, very much in question, right? All of those companies post 2022 had a really big run, as Chinese companies were trying to buy as much equipment as they could before U.S. restrictions came down. And they're coming off of that. I mean, it's essentially a pull forward, and we're now very much in limbo, and we're sort of feeling the after effects of that. I don't know where it all goes, right? I don't know what's going to happen here with China. I actually haven't heard much about fab equipment in context of China, U.S. government China restrictions lately. But I have to think it remains a area of focus. I mean, we didn't mention, but there was another report that came out this week that looked at DeepSeek reportedly is delaying launch of its release of its next
I saw
model,
that.
right?
Yeah.
And the report in the press is that they had to delay it because they're having problems getting their numbers to close on the Huawei chips they're using, right? Huawei has a AI accelerator variant of its Ascend chips that on paper has some interesting features of it. It has these big worlds, that are big clusters can be built. But they have to have those big clusters because they can't get access to TSMC. They're using SMIC's 7 nanometer process.
Nice.
So that's a larger process than
Right.
than
Older.
what
Right.
TSMC offers, an
Right.
older process.
Right.
They have to use a lot more of them, and they have their Huawei has its own software, CUDA equivalent, which
Yep.
is untested. So it's not surprising that it's not working out with its first major customer like this.
Yeah. Yeah.
But in light of that, like that, somebody could point to that and say, hey, look, our restrictions on China's access to foundry equipment, fab equipment is working. We've slowed down Huawei. We've slowed down DeepSeek.
Yep.
So we're probably
Yeah.
going to see more restrictions on the semi-cap makers into China.
Yeah. Yeah, and I think a good portion of their story, which if you follow them for a long time, they've sort of said the same thing. It's just a matter of timing because as like real kind of advanced packaging, sophisticated chiplet designs, bigger packages, gate all around, which they made a comment about, right? They kind of said, gate all around is a little delayed. They might be talking about somebody we don't want to mention in that comment. But you know who I'm talking about.
I was about to go there, so go ahead.
Yes. Okay. Anyway, I'm leaving that alone. Anyway, but their whole point has been like as we move to much more dense, right, packages, and we get to chiplet designs, we get to everything we want and gate all around and whatnot, and chiplets. Like that's where they start to see a ton of upside in their model for kind of ARPU per hardware segment that they're in. But that's kind of not today. It may not even be a lot next year ish. It might accelerate, but I do feel a lot of their upside is on this moving to the advanced packaging era because that's where they've got some real gold that's going to be needed, and their costs are their revenue or their selling price, their ASPs of that equipment is much higher.
Yeah, yeah. Well, all right. I mean, the company the other unspoken name behind all of this is Intel, right?
Yeah,
And
yeah.
it's very possible that we're just overthinking AMAT a little bit in that they're seeing
Yes.
the same thing ASML reported, which is they have 3 leading edge customers, and one of them has just drastically reduced its ambitions and probably will reduce it further, which makes it very hard for Applied Materials to get.
Correct. Yes.
So
No one though, dude. I read like a bunch of ones. Nobody wants to mention this. It was like it was the Voldemort of bogeys in like and like I had but I had this conversation with a bunch of others. They're like, we think it might be Intel. It's like, oh, the
yeah,
dots align, right?
yeah.
As
And
unfortunate as that is, but
it's interesting too because you could part of Applied Materials' problem was just that they're. I mean, the investor concern with Applied Materials was how vague they were, and part of their problem, I'm sure, is they don't want to. I mean, they're
not
like
at all.
they don't want
Absolute,
to dogpile on Intel.
totally true. You
Like
you
that's
never want to bring it up about your customers,
right,
but Intel was going to be the first to get all around, right, in ribbon
right,
fed. So
right.
like you should know this. TSMC was like, we're pushing it out. So nobody was expecting it anytime soon. So anyway, yes. Well, that leads us to our man, our what are we gonna call it? Weekly 5 minutes on Intel. Because a week does not go by. Oh, literally. I mean, quite literally, a week does not go by. So, to summarize, if anybody is not caught, Liputan arrived at the White House on Monday. Conversations were had. I guess. Sounds like it went okay. A statement went out. Right, we had a good meeting. All seems to be okay. Trump is off his this guy's a Chinese spy narrative. Now there's probably going to be something that worked out. And then yesterday, Bloomberg reported that apparently, now the government is working out some kind of a stake in Intel, which I mean, this is like full circle. Which version of the multiverse are we in again now? Right? Is it going to be a consortium? Is it going to be a whatever? So anyway, we'll take our 5 minutes of segment of Intel to talk about this because I'll just make a point and then you can tell me if you disagree because we haven't talked about this in general. So if the government takes a stake, and I'm also sort of assuming to this that there's maybe some also third party investors involved. That could be private equity or
Mhm.
company. I don't know, but if that happens, I don't see how the government, to protect its strategic national asset that it has just invested in, does not then make this tariff situation so that it's strongly encouraging all of the names who we have talked about to use Intel in order to make sure that Intel has customers and goes forward, etc. So I feel like there's, you know, regulations that will necessitate if the government gets as well. And I'm going to tell you, like, I wish I hope that doesn't happen. I hope that Intel can win customers on merit. Their CFO, Dave Zissner, has said it's not an astronomical amount of money we're short. It's just enough that we can't do it on our own. So, like, is that 10 billion? Is it 15 billion? I don't think it's Craig Barrett's 40 billion. That would be enough to probably take at least 2 nodes. But yeah, I mean, that's kind of like, I think the government involvement just brings a lot of weirdness that is unfortunate. But then, right, despite the comment I'm saying, the other than narrative that started happening, which again I saw on like Reddit and Twitter and even some finance shows, was, well, the Taiwanese government's invested hundreds of billions of dollars into TSMC, and that's why they are what they are. And I'm like, these are not the same things, you know, like, I don't think these are the same things. So this is not the analogy I want to be used, and I think we just need to really understand the complexities if a government gets involved, right, in Intel.
Yeah, I mean, I'm old enough to remember when America stood for free market capitalism.
Did it? Did it someday? Did it? Did it used to? We're not making America back to free market capitalism. We're going in a different direction.
So the general bias of, I think, most people in this country, certainly most people in the investor world and probably in tech too, have this bias that state-owned enterprises are inherently failures. Like,
Yes,
just
I would agree.
right.
Yeah.
And I sometimes push back on that, because if you like, the world's most successful and probably the best airline is Singapore Airlines, right? Easily the best airline in the world. Probably, I think it's one of the most profitable. And Singapore Airline is majority controlled by the government of Singapore. And they've been successful for years. And the distinction, I think, that is important to be made is between ownership and governance. And I know this is a little bit wonky finance talk, but the government owning something and the government controlling something are different things. And if you can navigate that successfully, sometimes it works out, right? And so, my thought about the U.S. government taking a stake in Intel is ideologically uncomfortable for me, but I'm open to the idea that,
Mm-hmm.
like, we need to do something. Intel needs to do something, and maybe this is the path forward. But if that's true, then we obviously don't have any details on this. It's not even announced.
No, nobody's
What
saying
will
yes.
what the detail? So very much the devil will be in the details. What does that agreement look like, right? In particular, how's governance going to be handled? Who's going to be CEO? Who is going to be on the board? That's the one that kills me, because, like, we've just gone through 10 years of Intel having nobody on the board with semiconductor expertise, and we just this year brought on some people who actually know semis, right? And in that time, when nobody knew semis on the board, they made a lot of bad decisions, which were clearly influenced by the fact that they just didn't understand the intricacies of the business well enough. Who in the U.S. government is capable of sitting on that board?
Nobody.
Right? There's nobody, and that's not a slight against
Yes,
the
agreed.
That's just like,
Just is what it is.
it is what it
Nobody.
is.
Yep.
And you and I have both talked to lots of people in DC about it, and, like, there's not a deep understanding of semis there.
Nope.
And so then we're starting to talk about a political appointee, and, like, that's where things start to go badly, right?
Very badly. Very
And
badly.
right, and then there are questions about, like, how much will the government invest? Is it and what will be required of Intel, right? Is the government just going to throw them a few $1 billion so they can finish the fab in Ohio, or are they going to plug that gap, the whole gap, to get Intel to 14A? My
Which would
math
be
is right. My
okay.
math is at 15 to $20 billion,
I
which is
would
a lot.
agree with that. I would agree with that. And that's just, okay, to clarify, that's just to get to 14A. That's not to carry on, ensure the next node. That's
No,
just for 14A.
that's
Yes, right.
That's right.
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 That was where I was at too.
Right. But I could easily see them just throwing them a few $1 billion to finish the plant in Ohio, and Intel still walking away from 14A.
Yeah, that would not be
Right.
good. Yeah.
That would
Okay,
not be
so
good.
here's the other thing. Do you think, because I sort of do you think that then, if, let's just say, the government does this and it includes, a number of other investors, I feel like that necessitates the spinoff. Like, you do that, you form a new entity. Again, to your point, that would be board members. I don't think you do this under Intel as it stands today.
I Yeah, it's possible. That's possible. I almost think that's worse though. That
Yeah.
ends up being a worse
Why?
outcome. Just because it's suddenly because in that scenario, it's very likely that the government has a much larger stake, right? If it's $20 billion, $20 billion is I think what 20-ish% of the company today. That's a large minority, but it's not like anywhere near controlling. In the foundry where they're gonna if it's just the foundry, the government puts in a lot more money, it's gonna end up with much higher level of ownership, possibly over 50%.
Yeah.
In which case it's literally a state-owned entity, which I don't think America has done in
Mm,
ever, maybe 100
ever?
years, right? Um, no, I guess technically Amtrak and the post office are private corporations. So in
Oh, let's go back to that, dude. Frick. Yeah, I mean, I guess the way I look at it though is that like I don't want the government or government appointed boardees like anywhere close to even to Intel's product, type of stuff. Like it needs to be isolated to Foundry, and how do you do that, right? And obviously, like we have talked about this before, right? That one, why couldn't a consortium work, or like you've said multiple times, right? Just heavily, it doesn't even have to be tariffs, just financially incentivize. You pay less taxes or something, right? If you use Intel Foundry, like just make it attractive to make some commitment and make some products. And also, it's interesting because they put out a video, I think yesterday, showing making ARM products.
right,
Yes. So I'll say the reason that is interesting is because it's actually very low hanging fruit, in my opinion, for them to make Graviton and for them to make Axion and for them to make Cobalt for the hyperscalers. Like that's reasonable. Like you've got all the IP in place. You got ARM deals, you got Cadence Synopsys, you got everything you need to do larger core designs, right? That's not chump change. It might not be $10 billion, but it's not zero. I mean, it's something. So yeah, I mean, I feel like there's viability for the customer landscape. And the other thing I want to point out, because I feel like people miss this point, which is one, 18A is only one tile on Panther Lake and the server chip, who's again, why do I always forget these names? Something Rapids. And it's going to use 3 nanometer. It's going to use 4 nanometer Intel process. It might even use some TSMC, 5 and 7. When they go to 14A, 14A would be one tile. They would use 18A. So if you get a customer to 14A, they're probably also a customer to 18A as it matures, because you're mixing and matching tiles. Like there's no monolithic in these chips that are going to be made at Intel's advanced, process and technology. So that's anyway. So my point is that that's a wider landscape than just, oh, they won customers for 14A. That would be one tile. Then there will be others that they'll make from Intel and whatever. So anyway, for whatever that's worth, my assumption is a 14A customer would also use 18A. It'll be more mature. The pipes will be cleaned from Intel product group, and you'll have, again, mixing and matching of tiles. So there's more there than just 14A dollars.
brother. I hate to break it to you, but that's like the second mate on the Titanic wondering if he's going to get promoted at the end of this trip.
I mean, I know I'm thinking out of the future. I'm just making the point about like it's not just 14A. Like that's not the only tile being used. It's like chiplets are Legos. Legos of process. Legos of whatnot. All right. Well, anyway, dude, like we'll see. This is going to be one of those what happens next week situations, but
Everything we say will be different next week. It'll be totally overturned next week.
in episode 132 of what happens next week as we set the stage. Actually, I think next week as a teaser we should do our own little like, well, you can do some of this. I'll do more of it. Like, Nvidia, what should we expect? Yada 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 primer, because
Yeah.
everybody's like, it's gonna be ginormous, and it probably is, but it's also priced in. Thanks for coming to my TED Talk. Anyway, all right. Well, thanks for listening, everybody. We appreciate your time. Please send us comments, thoughts on Twitter or email. You know where to find us. And we will talk to you next week.
Thank you, everybody. Tell your friends. Please send us comments, but not on LinkedIn, because everything I get on LinkedIn hates me. Twitter's great. I read it.
Twitter's great. Yes, same. Okay. Thank you. Bye.